Welcome back, and we are joining you live from ETNA Motilal Oswal studio, and this is bnsn now, where we get you answers for all of your stock-related queries. Just before we could hit break, we basically spoke to Kunal as well as Gaurang to get their views on how should one actually look at the market at this point in time. Where are the technicals, or what are the technicals indicating when you talk about the markets, given the fact that Kunal did specify that it was expected, or rather the pace of the correction was so much so that it was expected that Nifty would fall below the 22,000 mark, but nothing to be so perturbed about, because the indicators for now is showing that it is the market that is oversold. But yes, we will see some sort of a euphoria kicking into the markets. So approximately a 200 to 250 point correction could be likely, but nothing to worry about. Kunal, did I summarize it rightly?
Yeah, absolutely. Yeah.
All right. So let me then continue taking all of your stock-related queries then. And then this next one that we have is coming in from our viewer, John Lewis. He's writing to us from Puducherry. He wants to know about Indusind Bank. 10 shares of Indusind Bank at an average price of 1,053 rupees per share. He wants to know whether he should add some more at current price, and also he wants to know the fundamentals for the same, because he is planning to hold on to it for the next 2 years. What's your take on this, Gaurang? Let me come first to you on Indusind Bank. What's your take on this one, on the fundamentals? Then I'll come to you, Kunal. And one of the reasons why I'm asking you this also, Gaurang in particular, is the fact that there was that MFI exposure scare also for Indusind Bank. It got hit because of it during its earnings. It was very evident in the share price as well. But from there on, given the fact that now you have some sort of relaxation coming in from the RBI, what does it mean for Indusind Bank and its fundamentals going ahead?
Not only for Indusind Bank, there were a couple of other banks and NBFCs which are hard hit with the MFI segment exposure. And for Indusind Bank, Cheryl, it was not only in the third quarter, but also in the second quarter, wherein the bottom line had to take a hit because of the provisioning related to MFI. We have a positive coverage. I heard you saying that the caller has got about 10 odd shares, if I'm not mistaken. We have a target of level 120, approximately thereabouts. And with this announcement from the regulator, our sense is that there would be a reasonable amount of respite for all those banks and NBFCs who are struggling with the MFI exposure and the related provisionings. So this could turn out to be a positive for all those related entities.
Right, Kunal, what's your take coming in for Indusind Bank then, given the fact that our viewer is looking to hold on to it for the next 2 years or so, and is pretty happy with it, looks like it, wants to know whether he can average also?
Yeah, you can look to average. I think this last 2-3 days of fall for Indusind Bank has brought the stock back again towards a decent mean. I think till just about last week or so, the stock was up some 8% or 9% on a YTD basis in the last 2 months. And in the last 2 days, the stock has paid those gains for itself, and it's come back towards a flattish territory on a YTD basis. So generally, we see that a 2% to 3% kind of a correction after such kind of a swing high generally becomes a good entry point for traders who are looking at even a medium-term kind of a time frame. And I also believe that Bank Nifty as well as the banking stocks, private sector banking specifically, I think would be a key sector which can stand to outperform other than financials. So I think in that aspect also, Indusind Bank could be an attractive bet.
So Indusind Bank is an attractive bet. That's the word coming in from Kunal as well. Gaurang, tell you what, I'll come to you with the next one because Mukul Malhotra is writing to us. And Mukul wants to know about 100 shares of HAL that he's invested in. 3,500 thereabout is his buy price as well. And he wants to know at this point if he should be booking losses, waiting buy, because he is a long-term investor and he wants to know what the picture looks like to you then.
Well, so we used to have coverage on HAL some time back. Currently, we don't have it. But let me give you a brief about the sector that is the defense sector, and of course, Hindustan Aeronautics Limited, HAL. Well, it's one of the best companies placed in the entire defense sector to take advantage of whatever policy changes that the government has made. Very recently, I think about last week or 10 days back, we had some statement from the Ministry of Defense and from the Indian Air Force, representative in terms of resolving the delay for the next gen Tejas light combat aircraft, that is Mk1 and of course Mk2. They have decent order book is very strong. Production delays would be a short to medium term overhang, but resolution definitely will bring in more transparency and order execution will pick up. I won't be able to give a specific buy, sell, and hold because currently we don't have a coverage. But when you invest in defense, don't have 1 year, 1.5 year kind of time horizon. You need to have at least 3 year plus to get meaningful return from your investments, and that is because these are all long gestation order book that they have, and they take time to get executed.
All right, so that's the take coming in on HAL. Let me take this next query then, and the next query that I have is coming in from, okay, this one is also from a viewer. No, name is not mentioned, but very interesting one because he wants to create for his son who has just started working. He'd be grateful if the experts could suggest a basket of Smith stocks that one can buy in phased manner over the next 2 months. But he wants to keep them for the long term. Kunal, for the next 2 months, with stocks in this mid space is looking attractive and which according to you also for the long term would look good. And I'm not sure, given the fact that the definition of long term all of a sudden has changed. It has become now 1 to 2 to 3 years. Actually, 3 years is like extra long term looks like it right now. But what's your take? Which are the stocks that are looking attractive right now on the charts and the gentleman wants to the gentleman wants to actually go ahead and create a portfolio for his son who just started working?
No, in fact, long term now has become much longer because you'll have to wait out for the stocks to recover.
Oh yes,
so,
that's also there. Actually,
so-
yeah. So,
yeah.
this is like the terminology, the terminology for or the meaning for long term also changes as per the market cycle. So in correction phase, the long term becomes even longer, and bull market phase it is just the shorter amount of time, isn't it? Looks like it.
Yeah, absolutely. It looks like it. So, but I think your query is interesting. So, I think in terms of few select mid cap, small cap names. Again, I think at this point of time, the kind of stocks which can recover, come back could completely vary than what it could be once the market actually starts to settle into. But then I'll just highlight maybe few stocks where I'm keeping an eye on. They may not specifically be mid caps and small caps, but these are stocks where there is a stronger degree of relative outperformance. What we've seen specifically, for example, we've looked at Narayan Healthcare. I think that's a stock which has been looking very attractive on the mid cap end of the market. That stock over the last 1-2 weeks has seen strong relative outperformance. From the mid caps to large cap names, SBI Cards is something which I've been very bullish on, and I sense that the stock has shown a stronger degree of outperformance. Then you can come back towards the private sector banking names, the mid cap and the private sector banking names. I think IDFC First Bank at closer to 56, 57 where it's trading right now. That could be an attractive bet from a long term play. So these are a few names which I would just want to recommend. But as I said, that once the market recovers and shows signs of stability, maybe the picks could change.
I'm waiting by for that recovery in question then, Kunal. But time for a very quick breather on the show. When we come back, we'll continue taking all of your stock related queries. So don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, time now to get you some more news and updates. In fact, Adani Green Energy has raised $1.06 billion to refinance a renewable energy project's 2021 debt facility. The company, in fact, stated that it has successfully refinanced its maiden construction facility to develop India's largest solar wind hybrid renewable cluster in Rajasthan. In fact, it also highlighted that the long-term financing raised to refinance its construction facility has door-to-door tenure of 19 years with fully amortized debt structure emulating the underlying asset life. And the refinancing facility has received a rating of AA+ stable from 3 domestic rating agencies, that is ICRA, India Ratings, as well as CareEdge Ratings. So that's a little bit of an update coming in on that front then.
All right, so watch out for Adani Green Energy, but let's continue taking all of your stock-related queries. And let me take this next query that I have. This one is coming in from a viewer that is actually, it's expected given the fact the way how we've seen the fall in the market. There are a couple of lot of actually queries coming in. This one is coming in from Anand. He's writing to us from Bangalore. And given the current situation, he's searching where we are searching for bottom of bottoms. Will it be good to get guidance from Kunal on Hindustan Copper? 1,000 shares at a price of 260 rupees per share. He wants to know whether he should average at 200 rupees now or wait for it. And Coal India, 1,000 shares at an average price of around 200 rupees. Should I cut losses or hold?
I think for both of these stocks, I would recommend a hold. I think your buy price which you mentioned for Hindustan Copper was?
The buy price for Hindustan Copper was 260. He wanted to know at 200 should he go ahead and sort of average it out. Yeah. And just for my producers, Somashri, it will be Hind Copper for the stock that you're looking out for. Yeah.
Correct. So for both Hindustan Copper as well as for Coal India, my suggestion would be just to hold on to these names as of now, because both of these stocks have gone through a very sharp sell-off over the last 8-9 months. There have been few stocks which have actually formed a top much before the markets did in the month of September. Hindustan Copper, for example, the stock made a top in the month of April or May when it was almost at 400 plus levels. 415 is the high the stock had shown, and it's now almost down more than 50% from those highs of 415 thereabouts to 197. So it's a matter of time that these stocks would probably eventually form a bottom for themselves. Maybe another 5%, 10% correction from current levels is something which we may not rule out. But then I think there would be a point where close to 180, 185, the stock may look fairly attractive. Coal India, on the other hand, also I think the stock has gone through almost like a 30-35% correction from 500 plus levels to 350, where it's trading right now. Even at these prices, I would believe that there could be a slight room where the stock may correct a bit more. But I think that Coal India's and NTPC, etc., these are the kind of names which you should have as a part of your longer term portfolios. I believe buying at current levels could be a good strategy, but maybe buying slightly bit at a more corrective phase could be a much more better strategy if the stocks correct by another 5% odd.
Alright, that's the take coming in as far as those two counters are concerned. Tell you what, Gaurang, I'll come to you with the next one because Nikhil Sharma is writing to us from Mumbai. Intraday trader looking to find out about SBI because he wants to know if he should book losses at this point. And also 25 shares is what he's bought at a buy price of 715 rupees. Wants to know what's a good time to sell. What do you think?
Well, so, at the beginning of the show, I did mention about preference in terms of large cap where you should look at. Well, I would definitely not be in the camp of selling out State Bank of India. One of the reasons is, of course, we have a hold recommendation on SBI. Banking and finance was the first sector that I highlighted in terms of allocation, fresh allocation, or if you want to, or if you already have a portfolio and if you want to add on to it. So we have a hold recommendation. I think these are difficult times. Look, I mean, long-term investors, I don't think you should be deterred by the kind of volatility and correction that we are seeing in the market. Subject to you've got fundamentally strong stocks in your portfolio. At this kind of time, if you happen to sell out, you would possibly repent it in the next 3 to 4 months once the market makes a bottom and starts turning around. So hold on to it. If you have investable amount, you can possibly average small quantities. We have a target of somewhere close to about 930 from a long-term point of view on SBI.
All right, this next one that I have is coming in from a 24-year-old student who is also a professional cricketer. His name is also Kunal. I thought he was directing this question to Kunal, so I did not take his name. So his name is Kunal. He's a 24-year-old student who is a professional cricketer as well. He's writing to us from Kalyan, Mumbai. He has 30 shares of Power Grid. His buy price about 228 rupees per share. He's currently in 24% profit. He wants to know, Kunal, that whether he can exit from this and look to invest instead in Mahindra Life Spaces or any other stock that you recommend. Do you think it makes sense for this sort of a move? His investment horizon is 5 years. That's really good, given the fact that he's adhering to what you just now said, that yes, now at this point in time, the longer term becomes really long. But do you think it's a good move from Power Grid to Mahindra Life Space?
See, frankly, the profile makes me nostalgic, looking at the interest towards cricket, of course. And my sense now on the query which you have...
You can also dwell in a bit more on that as well, because you said it's making you nostalgic. Once upon a time, Kunal, 24-year-old, who was a cricketer as well, and was also just dipping into the market.
Yeah. So not dipping into the market, but definitely on the cricket angle, I was keenly interested over there. But then I think things have different. Things play out differently for each individual. And that's where I am right now.
So I think this time, Friday edition of Pathshala, this is what we learn, how things change for you. How did you actually move from that to this, isn't it?
Let's see. Maybe in coffee discussion.
Oh, yes. No problem about that also. We'll take it up on Instagram.
Done. So on the query which you have, I think, Power Grid is something which I would actually believe that it's something which you should hold on to. Now, I would sense that you are looking at constructing your entire portfolio step by step. And I'm sure that you're looking at Power Grid as not just a very short-term kind of a bet. You must have held on to the stock in the toughest of the market scenarios, in the best of the scenarios when the stock was at 300, 350 plus levels also. I would suggest that at current levels, you should stay put with Power Grid, because many of the other stocks which you're looking at, Mahindra Life, Space, etc., these stocks have fallen very sharply, and still it doesn't look like that the selling seems to have arrested into these names. And I always have this stance that whenever the markets make a comeback, the formidable large cap names, the low beta stocks, they are the ones which should bounce back first. So your shifting could be a good strategy, but maybe the timing of the shifting may not be good. I would suggest to just wait out for another few weeks. Once the stocks come back again quite strongly, you might probably want to switch from Power Grid, but maybe at higher levels, not at current levels of 240 plus levels, maybe at 260, 270. That could be a better level to shift from Power Grid. But then shifting to Mahindra Life is also not what I would recommend. Shifting to some other names once the market stabilizes, like SBI cards on the larger cap front, I think those could be much more better strategies.
All right, Kunal. Also, we will have another participant for that coffee chat on Instagram. It will be my producer Somashri, because she said that the query is coming in from a 24-year-old student, and I am actually 24 years, and I'm rolling the show at this point in time.
Wow.
So she is also very interested to know how you made that
Kunal's
switch.
namesake has a lot in common with
Yes,
a lot of
exactly.
us here, but let's hope that he hits it out of the park with that recommendation. On that note, time for a very quick breather on the show. We'll continue answering all of your stock-related queries on the other side.
Welcome back. You're watching Buy Now Sell Now on ET Now, show where we get you answers for all of your stock-related queries. But let's just take a detour and address a news that is just coming in, because the former SEBI chairperson Madhvi Puri Buch and others have approached the Bombay High Court to quash an order directing the Anti-Corruption Bureau to register a case against them in a listing fraud case. Ankur is here with more details to help us understand what is this case about and how long back does it date. Ankur, good morning.
Yes, SEBI and BSE have moved Bombay High Court against an order by Anti-Corruption Bureau Court. The order was passed stating that there should be probe in the matter of an entity which got listed way back in 1994, and then a report needs to be submitted to court within a month. But as far as the statement from SEBI as well as BSE are concerned, they have clearly stated this looks like a frivolous application because the case is very old. It is way back in 1994, and even the company is not listed anymore. Therefore, the current officials who are named in the application, which are former SEBI chairperson Madhvi Puri Buch, the WTMs of SEBI as well as BSE MD and chairman, which are named in the application because they did not take proper action against irregularity. These are the allegations which are placed in the application, which is moved by the applicant. But now SEBI and BSE have jointly moved Bombay High Court, terming the application as frivolous, and none of the current officials which are named in the application are actually involved even in the matter. So all in all, the action has now moved to Bombay High Court, which will hear the matter on March 4, and there is an oral direction as well not to take any action till the next hearing happens.
Alright, thanks Ankur for getting us all of those important details. Tell you what, let's continue taking all of your stock-related queries. The next one, in fact, Gaurang, that we have is coming in from Shanmuga Sundaram, who's a senior citizen writing to us from Coimbatore. Wants to know about Reliance, actually, Gaurang. He wants to know about the 300 shares that he has. 1,270 rupees is his buy price. And he wants to understand from you what you think about the prospects when it comes to Reliance Industries.
Well, so being a large cap, I think Reliance has to do what the market is doing, right? So no surprises over here. We have a buy on Reliance Industries from long-term point of view. In terms of targets, whatever we've seen with respect to the earnings, we have a target of in an excess of 1,500. And again, I would like to say the same thing which I advised the earlier caller investor with respect to State Bank of India. If you have good, strong fundamental shares, don't get worried about the short to medium term corrections that we are witnessing. we may face this for the next couple of months, but once we make a base and start the recovery, I think you will be pleasantly surprised with the kind of returns that you would make on these kind of stocks.
All right, so that's the take coming on Reliance Industries. Let me move on then, and let me take this next query that I have is coming from Sujit from Kolkata. He has Oil India, about 150 shares of Oil India at a price of around 530 rupees per share. He wants to know whether he should opt to average it out or wait for more decline. What's your take, Kunal, on this? And firstly, I just want to understand, because a lot of queries when a market is correcting, you get only the first thing, should I go ahead and average? Basically, make sure that if the buy price is higher, you buy it at a lower cost, so your total value of holding a stock, that sort of goes lower, right? That's what averaging means.
Correct.
So do you think in this sort of a market, averaging makes sense?
No, it's very selective, Cheryl. It's not a uniform, universal answer for this question. I'll give an example. For example, if you buy the stock, say if you bought Oil India at higher levels, and currently when the stock is at 340, you're buying this in the anticipation just to reduce your cost price. The damage happens once the stock keeps falling further, because then you are caught with a much more higher quantity than what you were buying, what you would have bought in an earlier scenario. So that generally leads to an increase of pain into stock prices and holding on to the stocks. I understand that the stock price have reached some sort of a bottom zone for itself, but then it's always best to buy it on confirmation rather than on anticipation. For example, in the last 2 months itself, the stock has not been able to break past above its 20-day moving average, which is the first level of confirmation a stock requires to anticipate any kind of a change of trend. Now, there could be a possibility that the stock may keep falling further till the time it comes back and then breaks past above the 20-day moving average. So I think I would probably suggest to just wait out for some more time. Don't average at current levels just because the stock has fallen. Wait and buy only once the stock confirms that it's ready for a reversal as well as showing signs. So it's always better to buy this maybe a 5%, 10% higher rather than buying this at a lower end and then just hope that the stock prices would probably arrest and the stock, the stock may stop falling itself.
All right, then thank you so much, Kunal as well as Gaurang, for helping us out with all of the stock-related queries. We have our agenda set, Cheryl, for Friday as well. We got to cover a lot when it comes to the show, queries and cricket. But with that, completely out of time on this edition of Buy Now Sell Now.
If you like this video, then like, share and subscribe to ET Now.